Hey traders, Raghee here, and in this recap video I'd like to talk about staying committed to a bias, to a directional bias, and how that's different than a trend. And we're going to use the chart of bonds, and we're going to use a chart of the euro to talk about that here today. So when we talk about trend, it's typically going to be the structure of the grab candles and the 34 EMA wave. We're going to be talking about how the consistency of a certain candle color and the support in the wave can continue to give us insight into the direction of the trend, a la Charles Dow and the 4 market trends. Now, emphasis on 4. There are 4 market trends: up, down, choppy, and channel. And one of the mistakes I believe a lot of traders make is they don't heed the words of Charles Dow, and what they do is they assume that if a trend is tested, or when a trend is broken, like we have right here, that suddenly that broken uptrend then means we're going to see a downtrend. And that is simply not correct. What Charles Dow would have taught, and what I learned from him, obviously not in person, but what we have is a market that goes into a sideways range. So from the uptrend, we end up with chop. So there's no trend here, right? The trend is now broken, but we do have bias. What do I mean by that? Meaning we have bias. I have a directional bias, or what I call DB. I have directional bias. In other words, I'd still like to be long, not long within the context of a trend, but long within the context of what I think is overall bullishness. So when the bond market broke the trend, right back here, rather than bailing on any kind of buy, what we started to do is factor in when the next support level could kick in, and we put in a buy. And that's exactly what we did here. So the follow through to the upside, gang, is not a continuation of the trend any longer. It's a bounce from an oversold support level, and we have to remember there's a pretty good chance that this area up here is going to be an overbought resistance level, and if it doesn't stop here, the next level will be up in here as an overbought resistance level. So that's the first thing to think about with staying committed to a direction. You can commit to a trend, you can also commit to having directional bias, and you really want to look for both. Well, let's talk about how this played out in the euro. Today, the ECB began TLTRO. Think about it as kind of like TARP. How does a central bank inject liquidity into the banks? By the way, China has already done this, and now the ECB, Europe, has now done this as well. You don't inject liquidity into the banks when macroeconomically you're doing well. You don't inject liquidity into the banks within a healthy economy, and that we don't have a healthy economy in Europe. I've been very bearish the euro, and I've been therefore also bullish the US dollar. And I've been saying for a while the demise of the US dollar, meaning the weakness that a lot of traders expected to come in because Powell and the Federal Reserve are now talking very accommodatively. I said, don't short the dollar. Wait for the dollar to trade at the bottom of the range, and in this case, you wait for the euro to trade into the top of the range. And the last time we shorted the euro was up near the 114 area. That's the last time that we shorted the euro. So today wasn't the shorting opportunity, it was up in here, right? That's the difference between playing what I call the top of the range versus, say, the momentum, which we saw here, the MOMO, or the momentum, right? I would rather you play the top of the range, not the momentum. Today was terrific follow through there. Now, what's the directional bias here? There's no trend, right? There's no trend to follow, but we have directional bias that is bearish, meaning we're going to focus on shorts after the market moves up to the top of the range. And let me leave you here with this, because this is really the foundation of everything that I do. We buy from the bottom of the range. We take profit or short from the top of the range. We short from the top of the range, or we take profit or buy from the bottom of the range, right? So we always think about where the market could move off of rather than what the market could move through. And that might take a second to digest, but what we're talking about is the difference between trading levels of exhaustion versus trading momentum. We're going to talk about momentum and exhaustion trades in the premium video. We had some terrific shorts this morning across the S&P, Russell, NASDAQ, Dow. I'll talk about the clearing range setup and what we have going on in the likes of soybean, corn, copper, silver, and a number of other markets. I'll see you in the next update.